Zero income tax till 12 lakh rupees under new tax regime. Boost for aadmi. In a significant move to ease the tax burden on the middle class, Finance Minister Nirmala Sitharaman in her Union Budget 2025 presentation unveiled a major overhaul of the new tax regime, including a zero income tax slab for taxpayers earning up to 12 lakh rupees annually under the new tax regime. This new structure is designed to benefit a large section of the population, especially salaried individuals, by reducing their overall tax liabilities. Under the revamped regime, taxpayers will not have to pay any income tax on earnings up to 12 lakh rupees per annum. The new rules provides additional relief for salaried individuals who will benefit from an enhanced 12.75 lakh rupees exemption when considering the standard deduction of 75,000. This shift is expected to have a transformative impact on household incomes, providing a significant boost to savings, consumption, and investments. Key highlights of the new tax regime. Nil tax slab up to 12 lakh rupees. The most striking change comes with the introduction of a zero tax slab for income up to 12 lakh, that is 12.75 lakh for salaried taxpayers with a standard deduction of 75,000. This substantial move reduces the tax burden on the vast majority of taxpayers in the income bracket. What this essentially means is that salaried individuals' income earning 12.75 lakh rupees annually will not have to pay income tax. Substantial tax cuts for middle class. By increasing the nil tax limit and introducing broader rate adjustments, the government aims to leave more disposable income in the hands of taxpayers. This policy is expected to lead to an increase in household consumption, a key factor in driving India's economic growth. Streamlined slabs and rates. Across the board, changes to income tax slabs and rates will benefit taxpayers at various income levels. The government has promised a simpler, more transparent structure that reduces complexity and allows individuals to retain more of their earnings. The slab changes are as follows. If you are earning above 12.75, then you have no tax up to 0 to 4 lakh rupees. After that 4 to 8 lakh rupees you have 5% tax, then 8 to 12 lakh rupees 10%, then 12 to 16 lakh rupees 15%, 16 to 20 lakh rupees 20%, 20 to 24 lakh rupees 25%, and above 24 lakh rupees 30%. The move is in line with the government's long-term goal of strengthening India's consumer-driven economy by alleviating the financial burden on middle-income earners. The new tax regime seeks to empower consumers and stimulate economic activity as more funds are directed towards discretionary spendings, savings, and investments. What this means for the average taxpayer. For many salaried individuals, especially those in the middle income group, this reform will result in substantial savings. With more disposable income, there is potential for an increase in savings, which could translate into greater investments in assets like mutual funds, stocks, and real estate. Additionally, the increased tax relief could provide the much needed support for household consumption, benefiting various sectors of the economy. Raising the income tax exemption threshold to 12 lakh rupees is a deeply positive move, especially for the middle class. For many, it brings a much needed relief, considering the increasing living costs and pressures of inflation. By increasing disposable income, the government is not only simplifying the tax system but also fostering consumer confidence. This change will impact a broad spectrum of individuals, particularly in urban areas, giving them more room to invest and spend. The overall restructuring of tax slabs aimed at a more equitable distribution is also an encouraging step towards creating a progressive tax environment, said Sandeep Chilana, managing partner of CC Law. Thank you for listening. Thank you for watching. Thank you everyone. Bye.